It's actually 7:04 p.m.
Hey, hi Reena, Mansi here.
Hi, Mansi. Yeah, hi.
Thank you for hosting this. Sandhya had a personal commitment, so she would not be able to join. But me and Sagar from my team are here, so we will be here.
Okay, great. So my question to you was, I can see that quite a few people that I had invited who had accepted are still to join. What is the situation from your end?
So we had around say 30 people who had said they will join. So normally we expect a 50% turnout. So around 15%, 15 people should join. I can see if some of my names here. Mr. Vivek is here.
Sure, yeah.
A couple of people are there. So maybe we can wait for a couple of minutes if that's okay. If not, you can go ahead and they can always join in. So I mean, I can see the speakers already here. So why do you want them?
Yes, exactly. So we will go ahead.
So
Thank you
it
for
wouldn't be respectful for them to wait. So
exactly.
yeah,
Yeah.
I think people will join over the next 10 minutes. So yeah.
Yeah, they are already joining in.
Yes.
Yeah, a lot of them. Yeah. All right. Hello, everybody, and thank you for joining. Welcome to this investor awareness session that we're doing for quantum-related startups. And last year, first of all, let me introduce myself. I'm Reena Dayal. I'm the chair and the CEO for the Quantum Ecosystems and Technology Council of India. Our mission is to enable and accelerate the quantum ecosystem in India. And the value that we hold very dear to ourselves is international collaboration in science and technology, right? So we are driven by these two, the mission and the value, which is very dear to us. And in the last 1 year, a little over a year of our operations, we have established ourselves reasonably well in the ecosystem, are connected to the government, industry, academia, various elements of the ecosystem. And very recently, we did a hackathon cum incubation effort, which was focused on startups, trying to get new startups enabled in the ecosystem. While we focus on that, several conversations with the investor community in India last year led us to understand, also with some of the startups, led us to understand that there is a big gap in understanding within the investor community on what quantum is, whether they should be investing in quantum. Is it today's technology or is it day after tomorrow's technology? So all of those issues we want to address because we are, we right now at the cusp of creating, working with the ecosystem and creating quantum-focused accelerators in India. So this is the right time for us to be educating the investor community as well. And in order to do that, what I want to do is I will give a very brief overview of what quantum is in a language which hopefully everybody can understand, even though you may have had nothing to do with quantum so far. And I'm going to take around 15 minutes for that. And then we have some very distinguished guests with us. And so we will do a panel discussion. We have people who have been working in the ecosystem, quantum ecosystem, investing in quantum, and we also have a representative of somebody who's who's a founder and running a startup company, right? I'm going to do the introductions just before the panel so that more people who join are able to get the background of the various panelists. So without any further ado, I'm going to share my screen because I feel PPTs have, or some slides actually have a way of keeping the focus so that I don't wander all over the place on this topic. I'm going to talk about the quantum computing imperative, right? So, and when I talk about it, the focus is not just on quantum computing, but the focus will be on also around the various quantum technologies that are there, so that you get a full view of what quantum is all about. And let me talk through it while I'm trying to sort out the PPT so that you can see that. So when we talk about quantum, for example, we have to look at and understand first of all, what is quantum and why is it relevant today, right? I mean, why are we talking about quantum at this point in time? And the reason why we're talking about quantum at this point in time, before we get into that, let's take a look at the history of computing. And the history of computing is, so what is computing, right? We're going to start from the basics. What is computing? Computing is actually any machine which is helping you do something that you would do with your brain faster, or something that your brain could not probably calculate, that needs to be done by a machine. So in that sense, in 2400 BC, when you had the abacus, which is a mathematical tool, when it was first invented, and it exists even today and is used even today, you have courses for children to, so that they can be sharper in mathematics, which are focused on the abacus. And that's a useful tool for computing, right? And over a period of time, as technology evolved, the printing press was, for example, discovered, and you could say, what has that got to do with computing? But then that's a mechanism for input and output of the written word in a certain form, right? Where a machine is able to now spew out those words without understanding. And then, later computing evolved to sort of interpret that. And now we have AI systems and so on, right? So the purpose of this slide basically is to bring home the point again that computing is nothing else but an abstraction. It's a way of representing information the way we understand it, but using machines. So sort of converting it into abstracting it over something which is a hardware, and then we take it forward from there. And the computing revolution as we know it today is the history of it is all about the classical computing, and it is based on semiconductor technology. It started off with those big mainframes that used to fill entire rooms, to now we have these small devices which we carry in our hands, and the processing power in this, the storage in this, is much more than the mainframe devices that used to fill entire rooms, right? So that is how much technology has evolved. It has been possible because of semiconductor technology, because that technology has been following Moore's law, which means that every few years there is the computing capacity in the same space has doubled. That means you can pack more and more transistors in lesser and lesser distances, and that density, as it is growing, it gives you miniaturization, it gives you more compute power. Now, today where we stand, if you look at the development in the technology, we are at a stage where 7 nanometers seems technically feasible, and 7 nanometers, just pay attention to the size that I'm talking about, at which transistors are existing now, right? And within that, TSMC has, done some, Taiwan Semiconductors has done some experiments and validated that 1 nanometer technology is feasible, right? Now we've reached a stage where if you go any smaller, you start seeing quantum effects in a very big way. And not just that, it is extremely difficult to do further miniaturization. So if you look, and of course that doesn't mean that computing stops, it just means that the rate at which we were progressing in terms of increasing our compute capacity has come to a certain state, right? It is no longer, in the current context, it is no longer going to continue as it is. Now, having understood this, we should say, okay, maybe there is enough compute out there. Why do you really need any additional compute? So I would, try and bring your attention back to some of the biggest problems that human beings are trying to solve. And there are many of them which you cannot solve with the current compute capacity. So that is one reason why we need more compute, we need better compute technologies, and we need something that will sustain us as a civilization for longer. And in that context, it is extremely important to understand that today, I'll give you an example. Let's say if you want to map 1 centimeter by 1 centimeter of the human brain, right? That is considered an extremely costly transaction, because the amount of compute and the amount of bandwidth and amount of storage that is required to do that computation is extremely large, right? So given that, so this is one example of looking at a problem which is unsolvable, with the current compute capacity, or it is just too prohibitively expensive to solve. And I talked about 1 centimeter by 1 centimeter, right? So imagine if you have to map the human brain, you cannot do it with current technology today, right? Similarly, there are a lot of other problems understanding how certain things work in nature, right? If we could just understand it better, maybe we could do better systems, we could solve the sustainability issue, we could have greener systems, and so on and so forth. Why, for example, if you look at how fertilization production happens in nature, right? Nitrogen fixing bacteria, they do that, they act as catalysts, and they cause a biological transformation, a chemical transformation using very little energy and no harmful byproducts. On the other hand, when we create chemical fertilizers, for example, when we want to create nitrogen as a fertilizer, the whole process requires very high temperatures, a lot of energy, and there are a lot of harmful byproducts, right? So what if we could understand how nature does it, and if we could replicate it? That would be very optimal. Maybe that will pave the way for more sustainable and green solutions as we move forward. So these are the imperatives for looking at alternate technologies. Now, while you and I may be having this conversation right now, scientists and people in the compute sector have been thinking about it for a while. They are seeing that we're reaching the end of Moore's law, if not today, 10 years from now, and so on and so forth. So they have been focusing their attention on several technologies like neuromorphic computing, which is to mimic the human brain and use that as a paradigm for computing. Molecular electronics and chemical computers essentially use chemical reactions for manipulating information. And then quantum computing, DNA-based computing, because with the various transformations that happen in a DNA, whether they could be used for computing. Now, of course, over a period of time, people have realized that DNA transformations are a better bet for storage technology, because you really can't get too much of a real-time scenario going with the DNA, so not great for computing. And of course, some people have experimented with artificial organic brain or wetware technology, which is a combination of some organic systems along with silicon-based systems, right? And seeing if that could serve as the basis for the next level of computing, or the future of computing. Out of all of these, the collective bet is on quantum computing. And of course, quite a bit of effort still happening on neuromorphic computing, right? So that's not an area which has been completely, kept aside. Efforts continue on molecular electronics and chemical computing as well. But from a mainstream computing perspective, quantum computing is where everybody is looking at in terms of the long-term future. I'm going to come, before I jump into all of the, into what is, I don't want to go too deep into the technology, but I do want to share this slide with you. This is a representation and a proof of my previous statement. I said everybody is betting on quantum technology. This is the nature of investment that is happening by governments around the world. I mean, this slide may be a few months old. It has been picked up from the Curica website. Lazy me, I didn't want to create my own slide. I'm just referring to them. But this very accurately represents the amount of investment that is happening worldwide, right? I mean, in China has a 15 billion investment number over there, and United Kingdom has 1.3 billion. India's National Quantum Mission is $1.1 billion US dollar investment. And before that, India has already invested in Quest and some other programs for quantum research and so on. So this is where everybody is making the bet. Now, if everybody is betting on this, and a lot of money going into research and development, a lot of collaborations happening across geographies, bilateral, multilateral, through private entities like QATCI, etc. So chances are, if you apply the human brain in one direction, this is where you'll move forward. But you shouldn't believe me just for that, right? Because just because investment is coming in doesn't mean that this is the technology to look at. Because 5 years ago, when I started looking at this more deeply into the Indian ecosystem, a lot of people thought I was wasting my time, right? I mean, I remember somebody very senior in the industry telling me, Reena, why are you working on or focusing your energy on what would ideally be your grandchildren's technology? So actually, I cross-checked with them a few months ago, saying that, do you still believe that I wasted my time on my grandchildren's technology? And they said, no. I have seen so much progress in the last 2-3 years in this space that, you know, it is definitely moving forward at a very different pace. So a lot of developments that have happened in the last few years and so on and so forth. So this is the little bit of the background that I wanted to share as to why should we really be focusing on this area. And I don't want to go too deep into the technology. In this meeting, I want to focus on the business imperative, you know, and focus a little bit more on the conversations with the people who are really deeply involved with startups or are representing startups. There are some messages in chat. I'll just take a look there. Okay, yeah, all right. So that's where we are. Any questions? Any quick questions? Maybe I can take up 2 questions and then we jump into the panel. Okay, no questions. Great. So let's get into the panel, and thank you very much to our esteemed panelists to be here today. They're taking time from very different time zones and at probably slightly unrealistic times. So I'm going to, you know, very early in the morning for Nardo Manaloto. Thank you, Nardo, for joining us. 6 a.m. for you, isn't it? Less than 6.
Yeah, no, you're welcome. Glad to be here. Thank you for having me. And it doesn't matter. I wake up early anyway.
Yeah, so Nardo is the managing director for Qubits Ventures, and which is exclusively focused on quantum startups. So, and has a wealth of information and experience in this space. So we're really looking forward to talking to you, Nardo, on this. Also, welcome to John Gabriel Boynot, who's joining us from France. He's a principal at Quantum Nation. And Quantum Nation is, I think, the first VC fund which was constituted around the world focused completely on quantum. Is that correct? Yeah. So thank you again for taking the time. And welcome to Abhishek Chopra, who's from India, and he's representing an Indian startup. And he had a very interesting and tough journey to start off with, because we are talking about quantum, where there were all doubts, right, initially in the ecosystem as to what will you do and how will you do and who will support you and all that. So thank you for joining, Abhishek. Abhishek is joining us from UK right now. Is that right, Abhishek? We can't hear you. I think let's do a mic check as well.
Okay, sorry.
That was audible.
Can you hear me now?
Yes, absolutely. Okay,
Perfect.
thank you
so
very
much
much.
for having me. I'm actually joining from East Coast, US.
Oh,
So not
East.
early as now, but
Okay,
good
great.
time to end the day.
All right. Thank you so much to all of you for joining today. And so I'm going to be asking a few questions. Please feel free to add your perspectives as well. And then towards the end, we'll have a short Q&A from the investor community if there are any additional questions. So, you know, first question, maybe if I can ask Nardo, you know, when you've been in this area of you know, investing in startups for a fairly long time. So, you know, in that sense, when you look at quantum, how do you find this area different? And you know, if you can talk about a few things between the nature of the startups and the investment style, I think that will be very useful for us.
Okay, yeah, sure. Great question, Reena. So deep tech, deep science is, I would say, there's a lot of in common things, right? So one of the in common things is pretty much it's a journey type of an investment, right? Because you have to look at it from I would say, a little bit more of a long-term perspective. However, one of the other common things across when I look at startups is I'd like to see how they normally go on with that journey by looking at their product roadmap, right? Because their product roadmap is actually really key. So you could see whether they're doing the journey in a investor-friendly way is what I would say, right? So meaning our interest is more on, yes, of supporting the startup, but looking at how the product will gain market and how the market will gain revenue and how the revenue will make the valuation of the tech companies. So from a commonality perspective, those are definitely, there's a lot of in common things on the investment side. The not so common thing is, I think you're right, the quantum technologies area is accelerating in a pace that I've never seen before. I've done investing in the AI side as well. And AI, investing in AI was also a long-term thing, but I think how the quantum ecosystem is building is much faster than my experience on the AI side, and even in health tech side as well. So I think to me, I'm bullish on the quantum investment, but I still understand that it is a journey.
All right, thank you so much. And John, what prompted, I think you have been part of Quantum Nation right from the beginning of the formation of Quantum Nation, if I'm not mistaken. And so what prompted the formation of a entity like Quantum Nation? Why did you need a separate entity?
So I'm sorry, there is a bit of background noise there. Can't make it. In fact, we've been funded just after the first wave of company created in the US, especially quantum computing companies. So in 2016, I believe it was the moment where we saw first spin-off of startups in the quantum computing field. So the most known would be IonQ, Rigetti, and also Google and IBM really started to invest large amount of money in the field. Xanadu was also around the corner at the time. So while we saw this first wave of companies, it was the moment when the two founders of Quantum Nation, Christophe Jurzac and Charles Becbédé, joined force to build such a VC fund. And on my side, I was working in a private equity firm, and I really believe that could be the right time to start to fund the first companies in the quantum space. So it was 2018. It was even a bit early to start doing so, but it was the opportunity. Well, it was the moment for us also to start building on what Europe had in terms of strengths on the academic side in order to build startups. So most of them are spin-off from research labs, and we had the opportunity to learn how to spin off a company from a lab and what does it take. So we did not start as a VC fund properly. We did start with a warehousing vehicle. So we did not have that much of tension in terms of timing to deploy, which was a great opportunity because those projects takes time to mature, and you really need to have the right team with the right roadmap to start and fund the company. So starting at early stage with small tickets ranging from 100K euros up to 5 million. And now we raised the first vehicle, Quantum Nation 1, 91 million invested in 23 companies. And we are kicking off also the fundraising of a new vehicle to continue to be active at growth and early stage for around 300 million euros.
Okay, great. We'll come back for more questions, but I wanted to also start the discussion with Abhishek. Abhishek, completely from the other side, right? You know, when you are a startup and you're trying to, sort of get funding, what are some of the challenges that you faced? First is, what was the biggest challenge you faced? And the second is, where did you finally find what really helped? So these two questions.
Thank you, and very important questions, I would say. When we started back in 2020, I don't think so there were a lot of people, especially from investment community in India where we were, that understood the technology. So when we started off, we didn't even have the plan to make it a venture-backed company. I think so. It was as we were progressing and as we started to get a little bit of insight, okay, things are moving in the right direction. We are doing something which is good. I think so. The advisory board that came along helped us to understand some of our, you can say, the strengths as a company. And there, I think so. It started to make sense for us to become a venture-backed company. And then we had those ingredients, but it just was not flashing it out. So the biggest thing I think so that helped us was the coming of a more experienced advisory board, which was very technologically, you can say, advanced in that. And they said, before even going to investors, why don't you first give them the confidence by raising with people around you? So we raised a small friends and family angel round that gave us the confidence of how investment actually works, and that actually helped us to entice more people to come into and look into, okay, what Bozon Quissa is doing, because this also included few people and their skin in the game in that regards. But I would say that as we move along, we understood that there is something called as venture-backed friendly companies, which needs to have those metrics. And if you don't, it's better to stay away from the game. But if you then have them, then those need to be portrayed out. And that helped us to get to our pre-seed funding, where if you look at the investor base, you won't see those familiar, big, usual angel investors or VCs. You will see very, again, technologically very advanced, high, like people who understand tech and always are on the forefront of the tech, investing in us, because they understand that there's a market, they understand the journey, and I think so the most important also the founder market fit, as we call it. So we had those basic ingredients, and yes, it was a struggle. We did pitch at like when we started off to 50 companies, 50 VCs and angels in India. It didn't work out, was a setback, but understood why it was. And I think so I'm very grateful that learning curve helped us to reach where we are.
Sure. So, Narda, when you look at what Abhishek is saying, one of the things that strikes me is that I think this fear of, today even non-tech investors in India invest in deep tech AI startups because AI is fashionable to invest in. And it has been proven, and, and e-commerce startups, even somebody who has never known the spelling of technology will invest, because we've got so many e-commerce unicorns in India, right? So I think the retail section is booming from an investment perspective. But looking at it from a quantum perspective, one of the things that Abhishek talked about is that only, very tech savvy investors are coming in. So my question to you is that, and I understand that the risk that people perceive in this is higher. In your mind, is the risk any higher than space technology or, some of the deep learning solutions that exist out there? How do you perceive the risk comparatively?
Yeah, there is a slightly higher risk in quantum, in my perspective, right? Because, for example, like space technology, AI, and all these other technology, health tech, I consider them as like applications of these kind of computing type of paradigms, right? Quantum in itself has it's very nature-based. It's also kind of weird, right? There's a lot of weirdness that goes into it from a quantum physics, quantum mechanics perspective, and a lot of people don't understand it. And so to me, there is a slightly more interesting risk there. But the key with quantum is it is such a game-changing technology if everything is proven to work, right? And I think we're seeing a lot of progress on how this technology is shaping up out there, right, with big companies and so on and so forth. So there is, I would say, a slightly different risk just because there's a little bit more unknowns in this space, and we're coming up with new innovation that even myself cannot keep up to pace with, right? Every day.
Every day, every day.
every day something comes out, and it's like, okay, it's an improvement of something, and it's a new material on something, it's a new startup on something, and I think those are all fantastic positive things that happen. But the hard thing is to constantly chip at it and make sure that it can work at the end game, right? So that's the key term.
Thank you. And John Gabriel, what is your view on this, right, from a risk perspective and risk as well as reward perspective?
So I would go in the same direction as Nardo, sorry. Mostly because there is still a technological risk in quantum computing. I also want to emphasize that we do invest in quantum technology on a global scale, meaning that we invest in quantum communication, building quantum networks, and quantum sensors. Those do not have any technological risks because there is product of the share that do exist that have performance above the current market solution, classical one. Still, we need to demonstrate that there is a product market fit and that people are willing to pay for such performance. And those are classical business risks, and we know how to mitigate them, and we know how to orchestrate the development of a product in order to limit them. On the quantum computing side, there is a lot of path to be pursued in order to demonstrate a quantum advantage. And therefore, we are still at a stage where technology is critical because there are in need for development of such technology, and there is still need for some science. On that matter, that's a risk that do not exist on classical businesses and digital one. But that's also the reason why the reward is more important, because if such risk can be taken by players and if it materializes as a genuine product and demonstrates the performance that are theoretically demonstrated, there will have strong comparative advantage facing the competition. And that's the reason why shareholders in those companies will benefit from a lot of value, because companies demonstrating an industrial quantum advantage on even a small industrial use case will be in a monopoly situation where they will set their own price and they will have some great advance in front of corporates or other startups. So on that matter, there is the risk and reward associated to it that make them a good investment. I believe that the hardest thing is the fact that those are new markets, new businesses, and there is a high barrier to entry. And you won't develop a quantum startup in your garage, as Apple have been, because you still need to do some science and you still require lab instrumentation, etc. And that's also something very positive for us, because we know that it's hard to bring a new competition on that market, and we need to syndicate forces and to have organized competitors, and it's easier for us to witness them and see their development on that matter. So building on our experience as the leading investor in the field, we are able to really assess and compare what have not been working in the field, mostly due to the fact that technology might not be ready for some use cases. And we are also more aware of what customers are looking for. And that's a huge asset when we try to enlighten the strategy of our portfolio companies, because we've been speaking to customers during the last 4 years, and we know exactly what they are looking for if they want to pay for quantum computing.
Sure. So Nardo, picking up from the same, I think one of the things that I'm realizing is that your company focuses more on the application side of the quantum, and especially from the healthcare perspective, if I'm not mistaken.
Yeah, I'm actually sector agnostic, Rina, but I focus on quantum technologies early stage, pre-seed stage.
pre-seed stage, right? And so one of the things that this is a question both for Nardo and John Gabriel is that if you look at the spectrum of quantum technologies down to the hardware for core computing, and the other is the end user applications, let's say for the financial sector or for the healthcare sector or for life sciences. Between these, how do you see the ticket size vary as well as the duration in which there is likely to be any movement in terms of returns?
Yeah, so hardware is always expensive and definitely a little bit more risky, right? So, and software is a little bit more less risky and easier to develop and things like that. But in terms of how the value would be at, right? So we see a lot of hardware that is more foundational, but you also see a lot of software that could also be foundational. So I think you just need to have a good understanding of, the entire technology stack and what it brings, and also the applicability of such technologies and in solving industry's problems, right? And knowing what industry problems are really gravitate towards this kind of technology. So in my perspective, yes, it's probably easier to develop something on the software side. There's also a journey towards the software side in terms of things like you could start up with quantum inspired. You don't necessarily have to be a pure quantum computing software startup that's solely run in quantum computers just because it's not as ready yet, right? So I mean, there is a way to increase your valuation over time, but between the two, hardware, chips, components are a little bit more harder to capitalize and higher to capitalize compared to software companies.
Thank you. And John Gabriel, your viewpoints on this?
Well, I do agree. There is being a VC fund also a way to mitigate your risk and have a strategic portfolio approach. And by balancing short and long-term opportunities, we are able to first bring synergies between our portfolio companies and also being able to face what could be lengthy development process by investing also in earlier stage companies that might not be the solution everyone is thinking about, but is developing with a pragmatic approach, a working solution. And that's a way for us to really mitigate that kind of risk.
Sure. And just so that I clarify, I see quite a mix of people in the audience. So I want to just clarify, and you can correct me if I'm wrong. One of the things that I understand is that investing on the hardware side is bigger ticket size and longer duration wait for returns, any sort of returns to materialize. Whereas investing on the software side, and the more you go towards the end industry applications, the smaller the ticket size can be, as well as you can probably see a little faster return in certain areas. So for example, if you're doing quantum optimized solutions with existing hardware software solutions, you could show performance improvement, more specialized solutions in certain areas even today, right? And without waiting for other things to materialize, and the solution can get better and better over time. So I think, that's the kind of variation that would be there. I hope I got it correct.
I would say that can be true for classical computing. We are very, very early in the development of quantum computing. So the most safe way is to go full stack, but it do requires a lot of resources. Mm-hmm. And I believe that there is still a major risk with pure player software approaches, is that you still are very dependent to the quantum hardware that is being developed. Facing this external risk can cost the life of a company if the company do not have enough resources to survive in the long run without ARR and without demonstrating a business based on consulting. So that's still doable if you have a competitive advantage, mostly if you are expert matter, if you have a team that have a great expertise in some specific verticals and know how to address that, and able to provide a speed up in the classical regime. If you have those two criteria, you can have a real interesting value proposition. If you're a generalist quantum software, I believe that resource will be key to survive, just due to the fact that you will depend on the hardware side.
Right.
Sure.
And-
So, yeah, go ahead, Narendra. Yeah.
Yeah, I just want to add to that. I think one area that a lot of people often do not get to see is that a lot of these quantum technology companies can actually have the quantum companies as customers, right? For example, you would have you could build a cryo fridge, right? There are startups in the cryo fridge area that has quantum companies as customers. You can build photon detectors or next generation lasers or optics that can have quantum computers as. So there's also that piece of it that you also have to look at. And then the other piece, the other addition would be more on, there are components, chips and, picks and shovels type companies that creates all these smaller components and chips and integrated chips, interconnects and things like that. That can also be, you can look at it from a developing something, but can also become acquisition targets for larger companies. So there are many ways to definitely look at it from, whatever you want to build. But I think, John Gabriel's right about, looking at it from a business perspective and looking at how you create a short, midterm, and long-term approach to your product, market, revenue, and valuation sequence.
Sure. So, Abhishek, question for you. How have you found your journey different from other startups who are not from the quantum space in this regard, right? I mean, when we talk about risk, we talk about return. How have the questions panned out when investors have questioned you? Have you, sort of had an opportunity to, find the differentiation and so on?
I think so. Definitely, it has been a journey for us. I don't think so we had the answer on day one when we started, but now if we talk about it, exactly what John Gabriel mentioned, that having that just like sitting next to the industry and like end users, and we are that's where we have found our niche, that we are closer to the aerospace, the automotive companies, the biotech companies that we are working with. And they understand our value proposition, even without, even if I remove quantum from it, they understand it because we are so end user ready. Quantum comes behind it. And then again, this was a discovery that was made over time, that what will sell, what will not sell. And that definitely, as mentioned by both the panelists here, that it de-risks the business startup like in the quantum space. Because the very fact that there are so many unknowns makes it a very, very complicated business model. So if you are starting to put a lot of known things or start to reduce the unknowns, that helps, and which is what we did. We initially we used to just give our pitch, but when we started to showcase a GUI of our software, that this is what it can do, a lot of people understood. So that was one risk gone, that it's not just about code and quantum in that. Then over time, we started to show benchmarking problems. Now the product, it is in the stage where end users can not only see it, but also use it. And that is what we are showing the more as a proof of concept to investors, that look, that this is working out for the end user. We are creating that near-term value without even going into quantum hardware, as very well mentioned, that quantum inspired approaches are the near-term way to bring that value addition. So these are the ingredients that help a startup like us, and also the differentiating factor, because we are not either in that extreme like quantum hardware space, which is very challenging, and more risky. And then you can say a lot of middleware where you still need to be either coupled with hardware or coupled with software, if not now, in near future. So that we found our niche towards being so close to end users.
Thank you. I think that there's something very interesting that you said, where you reduce the number of unfamiliar items or the unknowns for the investors and from your own from the company's health perspective or risks perspective. And I think that is very valuable because we just finished the hackathon. We're hoping we'll get new startups out of that. A lot of people are geared up, very good solutions. And one of the interesting things I found in some of the cases is that people are looking at a solution which is unique, but they are taking a traditional approach to it. For example, if it is an AI-based thing, they're also recommending a traditional deep learning model, and then betting on quantum ML as quantum ML matures more and more, right? But since they would be early on involved in this, you can definitely see an advantage as to how they are thinking about it, and that is unique, right? I mean, so I think that approach makes a lot of sense, and I'm pretty sure investors also look at that perspective as they examine or should look at that perspective as they examine the startups which in the quantum space. So
Sorry, I just want to add one point on
Sure.
the new startups. I think so for them, it is very important, which one word that was floated around, product market fit. And it's not just always about showing the product market fit in terms of results. In very early stage companies, I'm saying very, very early stage, even before pre-seed, just by having that, like talking to customers and yes, you have to do the hard yards. Not every customer is willing to talk to you, or somebody from the company, if they talk to you, start saying that, okay, no, this makes sense. Let's see where it pans out. Even that kind of a confidence to the company makes a lot of difference. And the you can say how the idea matures from there. And then later on, as the company progresses, that same can also be used as a testimony for very early stage company to show very early signs of product market fit. So that is one of the ways, at least from a software point of view, an application point of view, early stage companies can reduce that one risk. And I don't know if Nardo and John Gabriel, if you guys agree with that.
Yeah, I agree with that. I think, sometimes you can have a startup that's still building the product at a very early stage. However, they're hitting the right problem for a certain industry, right? And then if they're able to basically say, what I call a letter of understanding or letter of intent to actually do business with them, a contract's not really written up yet. But the fact that they are showing interest and they're working closely with the customer and they're able to provide some sort of proof that, hey, there's a lot of intent for this big company to work with, let's say, Boson Q to do something meaningful, then I think, that goes a long way.
Sure. I want to take a pause here and see if there are any questions from the people on the call before I go back with my additional questions. Any questions? The audience?
Hi, Reena. This is Manohar. I have a question.
Yeah, please go ahead.
So, especially in quantum and hardware-related technologies that are not really giving great yield, even the giants like Cisco and all have been facing this pressure of returning money back to the investors. The returns have been very, very dull, and it's not really up to the mark. In this kind of a scenario, where do we see the investors' money should go?
From a quantum perspective or in general?
Yeah.
From a quantum perspective.
Yeah.
I mean, I will let Nardo and John Gabriel talk about it. I have my own views on this, but I think they are the experts. Let them talk about it. I'll share my view as well.
So I just want to make sure I understood the question. So is the question if investors are expecting returns? I'm just rephrasing this. If the investors are expecting returns and big companies are not necessarily, the hardware, quantum hardware piece of it is not necessarily geared towards that, right? Is that the gist of the question?
So if you see, even though the cash-rich giants like Cisco, once upon a time, they used to be the hardware pioneers, right? So even them, they are moving towards software-based, SaaS-based, IT-based solutions, not coming towards quantum technology-related hardware, innovation. Where do we see as an investor, if we had to pick something which is going to be a focused area of investing, especially in quantum? What exactly are we going to look at? How is it different from someone who is at a level of Cisco, and the kind of fund access that they have? If they are not able to put, how is an angel investor?
No, but Cisco is really deeply investing in quantum. What makes you think they are not investing in quantum?
But then the overall model is what I felt is like they are moving towards more of an IT integrated service model.
That's because of the software defined networks and the fact that a lot of stuff is moving at the software level for networks. That's the evolution of the networking paradigm itself, right? In the current context. But Cisco is investing very deeply in quantum. They are part of all the consortiums in the US. They're a US based company. If you look at US consortiums focusing on quantum internet or quantum network, Cisco is everywhere. So I'll let Narzo talk more, but this is my observation. Yeah.
Yeah, Cisco is definitely in it, right? But they need to look at it from the position of strength, Manohar, right? As opposed to, looking at it from a perspective of, the innovation aspect of it, right? Because it's a tricky balance to do for large companies because of, they have to report earnings and things like that, right? So with Cisco, they're very strong in the networking communications aspect of it, in the software side of things, and probably a lot of the AI defined related stuff like SDNs. So they're probably going to continue that. They're going to look into things like interconnects, right? So meaning, in the world of communications and networking, how do I connect a hybrid approach towards a network, right? So because it's never about going to be like all quantum computers. I'm going to have a mixed hybrid environment. So how do I get them to connect? So all of this would be communication, networking, integration, and the software that runs it. Whether they want to take a bet on a quantum computer, I don't think so. They're probably going to say the more quantum computers are out there, it's better for them because they're in the space of connecting everything.
Okay, Rahul, that helps. Thank you.
But you had a second part to the question, Manohar, around how should investors look at this space?
Yeah. So as an investor or as an investments manager, to be precise, if I have to look at a proposal, especially in terms of evaluating a quantum technology related one, how am I going to evaluate and which space should I be looking after, and what is the time of duration that I should look at to let investors say this is a great technology, just stay invested, this is going to reap its benefit and this is going to change the world per se. So in those lines, if we are to bet on something in this, where exactly are we supposed to start with?
That's a very interesting question because today, unlike classical computing where we have very standard hardware, right? I mean, everybody is focusing on the same kind of systems with minor variations at the hardware level. In quantum, there are multiple hardware approaches that are working towards a scalable quantum computer, and all of them are progressing forward in some form or the other. One or two of these technologies may suddenly shoot ahead, and suddenly the valuation of that effort goes up and the rest of it starts going down, right? So the evolution for quantum is at a slightly different stage on the hardware side, which is, I think, what John Gabriel was talking about in terms of the risk that is associated on the hardware side. And he also mentioned that quantum communications is a safer bet. And the reason why I think he mentioned that, I'll tell you my perspective on it, and we can go back to him for more insights, is that on the communication side, for the quantum internet or quantum networks, it is always a collaborative effort, right? Because the network, you have to define the protocols collaboratively, you have to agree to various kinds of standards. The network is driven by standards, right? Because you can't send something which the other side cannot receive. Then how will routers work around the world? How will you have repeaters? So what are those technologies, various components that are part of the network? And since there is more standardization there, the underlying technology is also much more standard. So therefore, the risk is slightly less in that space compared to, since you brought up Cisco, so I'm mentioning the communication space.
So I've just taken Cisco as one example. There have
Right,
been
right.
quite a few other companies which are fast-paced move towards software. I myself am an electronics engineer. It just gives me a little bit of a bad feeling why everybody wants to go into the only software business, but nobody wants to, do the innovation as aggressive as they used to do back in 70s and 80s.
Oh, you picked up my pet peeve. But the issue, I don't think it's a problem from the company's perspective. That creates a bigger issue on the skill gap. Because today's programmers, what you need in quantum is people who understand systems, right? And at the system software level. So because of the levels of abstraction that we have in classical compute now, with everybody moving further up the stack, a lot of people that you talk to have no clue what's happening at the bottom of the stack, right? So they cannot be converted into programmers who can work on quantum, because that requires a completely different mindset. So I think that's a bigger issue for the skill building. But coming back to, because we moved away from the topic of investment, John Gabriel, what are your views on the nature of challenges in investing in hardware, like that Manohar pointed out? As an investor, let's say, as a while we cannot have individual investors unless they are very, very high net worth individuals, but many of them may be looking at making reasonable investments, right? Angel investors. What is your advice for the angel investor community?
Well, there is many questions in this one. So
yes, I know. Thank you. Sorry. I mean, sorry for putting it all together. Please answer a couple of those and then we'll pass those to Nardo. Yeah.
I'll try to take it step by step. First of all, I believe that there is the hardest part there would be just to access to the right deals as an individual investor. So there is a global issue in providing access to deep tech to retail investor, and that's a move that's going to be in the financial industry to be able to provide financial products for the saving of everyday people, retail investors that do not require a minimum investment of 100k euros, such as our kind of vehicle. So I believe that the first step there. On the other side, there is publicly listed company that you can invest into, but you don't have the whole spectrum of what's currently happening in the quantum computing field, because not all companies are listed, especially in the quantum hardware and full stack. So there is also a huge risk in investing in companies that are publicly listed, because before the day that they will generate steady revenues and be able to demonstrate financial stability, it can take time, and the stock cannot resist to the current economy climate. So there is a huge risk that tech stocks can be very volatile, and therefore that you lose a great amount of money and you might recover it in the next 10 years. But we must emphasize the fact that those companies are still in R&D mode, and if they do not generate steady revenues, being publicly listed can be very risky on that matter. So there is a huge risk there. On the side of professional investors, as we are. We do invest tickets ranging from 100K euros up to 1 million at early stage. And those deals can be pretty competitive. So our due diligence process would be a standard one as an early stage investor, with still a great focus on the technology developed. And so we do hire scientists that are coming from the research group, knowledgeable about the technologies developed, mostly on the hardware side, and all the processes. And all of these technologies are at the intersection of a lot of expertises. So you need to be knowledgeable in physics, in computer science, sometimes in semiconductors, sometimes in photonics. So it's really hard to have one person with all that expertise. So despite the fact that we are a pretty knowledgeable team, one in quantum optics and one in neutral atoms manipulated by lasers, we still are an investment firm and must address deals as we do in the financial sector. So we do hire experts and scientists for our due diligence, and they are monitored by our internal scientists. So this is a key asset because for some technology, we are able to address them internally, but for more complex subjects, we do need scientific expertise, and we build a large network in that field. And thanks to the fact that we do have scientists in the team, it's really easier to go in depth in the subject very quickly, rather than just paying for a due diligence without really understanding what can be the ins and the outs. I hope that I did answer the question in a relevant manner.
No, that's very useful. And the reason why it's very useful for us in the current context is that we are having this investor awareness session a little before the solutions showcase session that we are having on the 2nd of December in partnership with T-Hub. And we did not want to reach out to the investor community just like that, right? Because then it's a theoretical discussion. We wanted to show them the results of a 3-month incubation effort, right? Where there are solutions which have been developed from scratch, or there were startups who are already early stage startups, and they use this opportunity of 3 months to develop something. And we are doing the showcase. It's not a demo day; it's a showcase to show the nature of solutions that are there out there. And I think, given some of the risks that both you and Nardo have talked about, I think it will be valuable for the investor community to have an accelerator which has scientists of the kind that you have talked about associated with them, advisors associated with them, so that the evaluations can happen in a manner, there is enough information out there so that when the investors come and, they start looking at investing in these entities, they have a lot more confidence than if they were just, individually being approached by some of these firms. So I think that sort of proves whatever you just said, sort of, strengthens the need for the model that we are trying to follow. That is one. And the second thing is that these, the entities that we are talking about are a shortlist from, we are going to do 10 companies will be, 10 products that will be showcasing. These are likely to become startups. And these 10 have been selected from 128 after 3 rounds, with a jury that comprised of people from across the globe. So people like Nardo was there as part of the jury, right, as well. So I think that's for an entity like QETCI, where our aim is to find the gaps in the ecosystem, find what is not going to work on its own, how can we catalyze it. I think some of these risks actually point to the need of these kinds of interventions, getting the right kind of resources together and so on. So actually, your points are very fortunate, even some of the stuff that Nardo said. Nardo, do you want to add on to that?
Yeah, I think the ecosystem definitely needs to get developed, right? And I think you have to look at the model of how this journey looks like, right? For especially in India. maybe you have to look at, there's a model of a pre-accelerator, there's a model of accelerator, and there's a model for post-accelerators, right? So I think, as you build your ecosystem, you have to look at it from a perspective of readiness of these products or potential companies that fits within that cycle, right? And then the other component with it is you have to look at the model of, how are you going to finance that, right? So the financing vehicle. Pre-accelerators are pretty much more program-based, just to get them ready to be in part of an accelerator. Accelerator, usually, what you want to do there is to have some level of funding, that comes on with that. Even if it's a minor amount, it gets them accelerated, right? The whole purpose of that model is to accelerate a company in some manner, and then have connectivity with John Gabriel, right, and Quantum Nation, Qubits Ventures, and other deep tech funds to basically look at the good companies that are coming out of that. And then on the post-acceleration stage, I've dealt with a lot of startups. And normally when they go out of the acceleration phase, the next question they ask is like, Nardo, can you still work with us for the next 2 years? I said, no, I can't. It's too hard. There's too many of you, right? So I think the question here is, what kind of program do you want to build after they've gone through acceleration? Because they need a lot more help as well. So you have to look at that entire ecosystem. That's one. The other is you have to look at many different types of financing vehicles, right? So for example, here in the US, we have what we call equity crowdfunding. That is SEC regulated, and you probably have to look at an equivalent version of that for India. And then the other part is not just equity crowdfunding aspect. There's also what we call SPVs, which is special purpose vehicles, where smaller investors can pool together, give $1,000, $2,000, $3,000 and to basically create a larger sum, right? So you have to look at many of those options to support this ecosystem.
Absolutely. Thank you very much. I think that is very valuable for people to understand. In India today, for deep tech, we do have the concept of angel funds, which are, some special purpose vehicles where, smaller ticket investments are allowed by a lot of angel investors and curated by formally by a company very similar to mutual funds, but it is just driven in a slightly different manner. And of course, internationally also there are these permanent capital vehicles that are there's a lot of conversation happening around them for longer term investments, because staying power for most funds, you still have to define a time frame, and therefore it may become a little difficult to do investments in some aspects of quantum and even space technologies, right? So something like that could also be really useful in this space. I have no other questions directly from you. I'm looking for the audience for more questions. Now, yeah, go ahead.
Hi, I'm Vivek Bhargav, and I'm a mentor with T-Hub.
Hi, Vivek, you had a question, please go ahead. Yeah,
I've been hearing and the conversation, and a couple of things which I would like to understand, both as an analyst and as a mentor and as an investor, is from an investor's perspective, and I'm speaking about somebody who's a tech investor, not essentially somebody who's the quantum computing investor. What is the inflection point, or what is the milestones that I should keep track of as achievements in the quantum computing space that tell me that this is now coming to a point wherein the acceptance of the technologies happen, and there is applications going to come through now, which may not require me to be an expert in quantum computing, but as a business analyst, I can now look at this as probably changing the landscape and creating investment opportunities.
Wow, that's a loaded question, Vivek. You're definitely an analyst. So here are my thoughts. And so one is you have to look at how the industry is looking at it, right? So for example, there was a really nice research done last year. I can't remember the research firm, They looked at the, I think, top 400 large enterprises and trying to figure out how they're doing with quantum, technologies and quantum computing. And the thing that came out of that was close to 70% of them already have some sort of a quantum pilot program. So I think one metric you need to look at is how are the enterprise looking at it from that standpoint, right? The other metric is not just the enterprise. You have to look at it from an industry breakdown perspective. The pharma industry is faster and the finance industry is much faster compared to maybe the healthcare industry. So you have to look at how they're adopting the adoption curve from an industry level. And I think there's a lot of data related to that as well. I think the other one is, of course, the amount of investment these enterprises are putting in these, right? So, and quantum is big. For example, another area would be how the government is supporting the adoption aspect, right? So things like the CHIPS Act of 2022. We're looking at it from, okay, well, if you're in the quantum technologies area and you're doing devices and integrated photonics chips and microelectronics and semiconductors and optics and things like that, then how is that allocation of money going? So you have to look at that as another metric, I would suggest. And then the other one is like things like what's going on with NIST, right? So eventually we're going to have to go through PQC, post-quantum cryptography, as an adoption curve for a lot of the enterprise. So I think you have to look at it at many angles: enterprise adoption, technology adoption, the funding, the money aspect of things, the industry angle of each one of them, and how the feds are supporting the program.
Right. Thanks, Naru. I think, I was looking at a much more simpler roadmap, but thanks for the answer.
I guess I've seen too much, Vivek.
No, thank you for. I think it gives it's a kind of holistic approach to look at the space. Yeah. So thank you for that.
And I think you can't really simplify it too much because of the multitude of technologies on which people are betting, right? So that is the other challenge.
Right.
Yeah,
so
that is the other challenge. Yeah, there's just too much stuff out there.
Yeah, I'm kind of. I'll just take a minute more and. As somebody is looking at these investments, the issue which I face is that I don't really understand what will click and when will it click in this industry. So I cannot get into that because I don't have the competency or the skill sets in that area of understanding what's the core technology being developed, how far it's progressed, what's the standards it has met, and all of that space. And what I do now is I say, look, let me look at the other way around. Let me look at it from a market perspective and understand, what's happening. Is the market accepting this technology? Is the market starting to use it on a larger scale? So if that is going to happen, then I think that is the point when I would like to understand where, what is that time frame or any of the metrics to capture, because that then becomes the inflection point, after which it becomes a large scale acceptance.
Yes.
So thanks for the answer. I've got the, thanks. So I've understood that, but yes, it requires a little bit of work, I guess.
No, so I can give you one example. Sorry, go ahead, Abhishek.
Sorry to cut you off. I just want to mention it to Vivek that looking at it from a market need perspective, I think so is a good lens to look at it. But also there is an understanding which we were put in scrutiny very early on, that can you show something very concrete at very early stage? I think so even when companies or market is investing that money, whether it is corporates, industry or government, they are not keeping the time frame of 1 to 2 years. Anything they are doing is longer term, 3 to 5 years. So looking at that perspective of where the investment is going in, from let's say a car manufacturer would put the investment in certain place, as we've seen like in BMW, or if you go to, for example, Cisco, their investment. So where that investment is going on is going to give a better sense, of how the market is shaping up. But I think so this is going to be a patient technology. Like you need to have patience because industry are investing from that they're not going to sign deals left, right, and center. They will take time to do POCs, multiple pilot before they even bring something out in public that, okay, we are doing this. So that is very,
Yeah.
That's an important point. And also, if you look at the multitude of technologies, Vivek, which are out there, I can share some examples with you. Today, if you look at the core hardware, right, you will see that a lot of companies, the number of companies that have invested in superconducting qubits, for example, is higher. So that shows an industry trend at the hardware level, which means that the ecosystem of components and things around superconducting qubit is also higher.
Right.
And then when you dig deeper into that, you realize that you can use a lot of existing semiconductor fabs and design houses, etc., to get a little bit of work done in that space, right? So which is a big ecosystem, and there is a cost advantage to all of that. I mean, this is very superficial what I'm telling you, but these are signs of a technology that people think is less risky if you're really investing big ticket as an institution, for example, into a particular hardware. On the other hand, the people who understand quantum will tell you that if we solve certain basic problems in photonics, then scalability is a given in photonics, which means that if photonics is perched on a pathway where if one of those major hurdles is crossed, it suddenly takes over every other technology. But it is a risky proposition. It is win all versus, you may never win kind of scenario. So there are very, you can count on your fingertips the number of photonics-based startups that are there, which are investing big in that area. Having said that, I think, so I think one thing is, just keeping a track, and you can get a sense based on how you see the investments happening in the larger companies, how you see the number of startups and all that. But having said that, going back to what John Gabriel said, having the right kind of scientists and technologists actually giving insights, right, taking inputs from different people is also very valuable in this space because, as Naldo mentioned, the rate of change is so high that one expert may also not give you everything that is happening. So this is more true for going deeper into hardware and very core technology. Now, if you're on the industry side, it's a little simpler, right? I mean, because then, market fit, as Abhishek talked about, is a bigger deal. Whether the end user or industry is, actually talking. If a company like Boson QSI is talking to 10 or 15 serious end user industry customers, that means something, right? And talking to means they are doing joint POCs and things like that. So that is a sign of how things are, how things are likely more concrete in terms of how it materializes. Then we use the same logic as we use in any other stack scenario. You have to see, if you're basing a system on a stack which is dependent on one company on this planet, right? Then your product syncs with that platform. So obviously those are usual things that you check even in classical, right? I mean, what technology are you basing it on, and whether that technology is future-proof in certain senses or not, right? So I think today in the stack, in the overall quantum stack, there are a lot of players coming in who are trying to provide this horizontal stack to you, which is agnostic of hardware. Basically, they are bearing the risk by accommodating different kinds of hardware at the bottom of the stack. So obviously, if you are building something on top of that, you are reducing the risk. You may be compromising on innovation in certain cases, but definitely the risk goes down, right? So I think all of those aspects, I mean, some of the tradition, I think 80% of it is still just traditional deep tech investment knowledge and scenarios and things like that, same kind of logic. And then the remaining is very unique to quantum.
So, Reena, I want to mention 3 points, which I think, so going back to what Manohar asked that time, for an angel investor, how it helps. So most of what we have done, and this is bringing the conversation to a level where we end this conversation with a positive note, positive in the sense, an open mind that when we raised the pre-seed round, as I mentioned, we raised through an SPV of AngelList, and there was one lead investor who understood. There were multiple people who understood the technology, and that prompted that, okay, others can look at from a market point of view and from a technical point of view, rely on those few experts who have invested, and that is how it shaped up to be. So things like of these sort do exist in quantum, even in quantum computing startups across the globe, I would say. It's just about, I think so one of the things very well pointed out, which I didn't even think about, was the access to those deals. How do you find those deals? So I think so as an ecosystem, going forward, it might be also helpful that maybe the quantum companies just in India, or maybe as we go along more globally, we can have that portal of, okay, who are the companies? Are they actively looking for investment? And that will ease angel investment into the business, because I don't think so anyone is going to large VCs from day one. They will need to raise those. So that's point number one. Point number two, just what Reena mentioned, a lot of companies came in the tech stack. So back in 2021, starting, we were talking about 5 hardware companies where our software can run. Like in 2022, you come, there are maybe 25 or so companies, and now much more, who are commercially actively making those hardware. So as very well pointed out by Reena, that the risk is de-risking from that is going down, because more players are coming in, so the chances of failure is less, and chances of really doing something is much more, even for software middleware companies, because hardware is doing that well. And lastly, the conversation has drastically turned around, and I think so Nardo and John Gabriel might agree to this, that the question when we started the company was, what is quantum? Now the question asked to us is, okay, what can quantum do for us? And that is because a lot of companies have that initial pilot team or some established team in-house which understand, and this is, I'm talking from an end user customer perspective, that they have starting to have that, and that changes the dialogue with the companies now on what we are doing. So these are some of the three things that I wanted to mention for the audience here.
Sure. Thank you, Abhishek, for that. And we're just 4 minutes away from the slated end time. So I'm going to just request, ask if anybody has any, we can take one more question. That's all. Otherwise, we'll ask the panelists to say one closing sentence. Any questions? No questions. So Nardo, John Gabriel, any closing points from your side? I think Abhishek wrapped up pretty, I think we can consider that as your closing statement, right? In terms of the 3 points. And over to you, Nardo.
Okay, yeah, sure. Well, first of all, thanks for having me here. I enjoyed the conversation with a lot of smart people in the audience. My closing thought is like quantum is a journey, and don't look at it as just pure quantum. You can look at it from an integration standpoint as well. So the opportunities is definitely a lot. There's definitely a lot of opportunities from a quantum standpoint, but look at it from a hybrid perspective as well.
Thank you very much, John Gabriel. You're on mute. If you, yeah.
Thank you very much for having us. I believe that it's going to be a very boiling field in the next years, and moving through quantum can be a long journey. This is the reason why corporates should start moving as of today, and learning where quantum can be included within their business roadmap to not miss that kind of revolution. There is also a second thing that is going to be critical for them, is the fact that by partnering today with startups, they are able to lock quantum computing hardware in the next years. Once people will all want to use that kind of resource, price can go up the sky, and therefore starting to move right now is key in order to lock value for the next years and the next decade.
Sure, thank you very much. And that brings us to the end of the session. Thank you very much for joining, and please don't forget to tune in. We have a hybrid event on the 2nd of December at T-Hub. We will be, there will be a few startups in person, few investors in person. we're doing an investor showcase on the 2nd of December. Most people who have joined here, I think if you got the invite for this meeting, you would have got the invite for 2nd of December as well. And so that's an opportunity for you to dig deeper into this conversation, see in real time what are the kind of solutions that are there, and so please do join us. And thank you once again. Thank you very much, Nardo, John Gabriel, and Abhishek, for all those very insightful and valuable discussion points. I'm sure I learned a lot of new things, and I've been working in quantum itself. So I'm pretty sure that the audience here has had a lot to take away. And thank you very much, everybody. Have a good day, good evening, good night. Bye-bye.